Welcome to this week's live ASX strategy session. Thanks for joining me. Great having you with me for another show. Lots to talk about today. New all-time highs in the US, consolidation locally, new highs in gold. So plenty of things moving around in the commodity space. And of course, any stock codes you'd like me to look at, get those tickers ready. We'll look through those in the second half of the show. Always interesting to see the stocks that you're looking at. As always, everything today, general commentary only, doesn't take your personal situation into account. Having been through all that, let's get into this week's first chart. So starting off with the ASX 200. And well, it's there's a fascinating story playing out with the ASX 200 at the moment. We've got this pause going on. There's a pause in big cap stocks and a boom in mid cap and small caps. So what does that mean for the index? Well, I'm going to come back and talk a bit about that in a moment. And then over in the US, there's a key indicator that's hitting new lows. And the question is that an early warning for US stocks? I'll tell you a bit more about that indicator shortly. But before we get to that, let's start with this latest price action in the ASX 200. And well, it's been a week of consolidation for the ASX 200. Prices have been gradually pulling back from last Friday's high. And this follows the previous week's rally off the 50-day moving average. So we've had a rally and then a consolidation. I think the price action we've seen so far, I think it's positive. I like that the ASX 200 has so far held on to most of these gains from the previous week. When you see a strong rally followed by a shallow consolidation or a shallow pullback, it's often a sign that the dip's being bought. So I like that. The underlying structure is also positive. We've got these rising moving averages. The 50 and 100-day moving averages continue to trend higher. Price, of course, is above those moving averages. And there's that long established series of rising lows and higher highs, which have been taking the market upwards. And these are, of course, all bullish markers. I think the setup is I think it's a bullish backdrop that we continue to have for the ASX 200. But is the ASX 200 ready to rally now, or is this all part of a longer ongoing consolidation? For example, like could we get a larger range be forming, like something like back in May, June 2024? You know, could prices currently be here equivalent, and there's this larger range forming? Like that's just one of the possibilities. I think that's certainly a possibility. So yes, we've seen a strong rally off the moving averages, but it doesn't necessarily mean we should be expecting new all-time highs in the next week or two. We certainly could, but just don't discount that possibility of consolidation either. For instance, we could get one possibility is we get several weeks of sideways price action, and that could just allow this 50-day moving average to catch up. Or it could be a case of like prices could also come back and retest the 50-day moving average or towards the 100-day moving average, and then that could be the scenario where we see like that May June 2024 type scenario develop. So a few possibilities that could play out. I don't think we need to predict the exact course prices will take, and seriously, nobody knows what that's going to be anyway. So it's just trying to understand some of the possibilities. And I think it's more a case. I think what we have at the moment is more a case of assessing the overall structure, and then understanding some of the possible pathways that prices could take. And I think if you can do that, I think that helps you position your portfolio according to the underlying trend, which in this case I believe is up. And it also then helps avoiding those day-to-day decisions that around news reports and fear that comes in after prices have been rising. I mean, just understanding that underlying structure helps with all of that. As I said earlier, that the big caps have been pushing, the big caps have been pausing. The big caps have been pausing, and it's been the mid to smaller caps running. So I'm going to talk specifically about the small ords and the emerging companies in the strategy session member section in a little bit later. But just let's jump to the ASX 200 equal weight. And I can show you what I mean by that sort of price action. And so coming over to the ASX 200 equal weight, so this takes out the influence the biggest cap stocks have on the market, because of course the biggest stock and the 200 stock are all weighted equally. And I think this provides a good insight to what's going on in the mid caps. So as we discussed, the ASX 200 hit an all-time high on the 25th of August and it's been moving sideways since. So I've just put this blue marker. That's the 25th of August. So just remember there's our ASX 200 chart, 25th of August. There we've got the sideways consolidation. Come over to the equal weight, 25th of August. And well, it hasn't been consolidation. The equal weight has made a series of all-time highs since then. But look at what the equal weight has. So look at those all-time highs that it's made since then. I think what that tells us is that while some of the biggest ASX 200 stocks have been treading water, there's been a broad-based rally across the ASX 200 stocks generally, and that's what you get when you look at the equal weight. You can get that more internal price action showing up. So it's not just heavily skewed towards those big caps. I think this broad-based strength, I think, is positive. I think the gains off the April low have these gains off the April low, they haven't been concentrated in just a narrow group of stocks or a single sector, as we sometimes see in the markets. Rather, it's been due to a broad-based buying across the ASX 200 generally, and I think that's a key underpinning for an ongoing bull market. Coming back to the ASX 200, near term, I think we could see this consolidation persist for a bit longer. I think the price action is generally positive, but this definitely has the potential to persist for a bit more. I think that dominant underlying trend, it remains bullish, and I think portfolios should be positioned according to that underlying bullish structure. So we're going to jump over to the S&P 500 now. Just before we do that, if you're getting some value, please hit that like button, leave a short comment if you can, and tell me what you think. Do you think the ASX 200 is going to make new highs in the near term, or are we in for more consolidation? And those things helps me heaps if you can do that. So while you're thinking of it, just click that like button now. Helps me a lot. Okay, S&P 500. Well, it's been a particularly quiet week for the S&P 500. Prices have just been consolidating near the all-time highs, but there's been quite a bit of movement below the surface. I'll come back to that in just a moment. But first of all, so why has the S&P 500 been so stable? And I'll show you why. It's due to this group of stocks. So this is an ETF, the Round Hill Magnificent 7 ETF. And so basically what this one does, it invests in the top 7 stocks, the big 7. So the Apple, Nvidia, Microsoft, and the like, those big mega stocks, the Magnificent 7. And look at what it's been doing over the last 7 weeks. It's been in this tight trading range. Last 3 weeks, sorry, I should say. The last 3 weeks it's been in this tight trading range. And with this group of stocks making up 34% of the S&P 500, well, it's got a significant influence on the index. So that's largely why the S&P 500 has barely moved this week. It's because this group of 7 have been in this tight range. Just looking at the chart, because this is of course, has a big influence on what happens next for the S&P 500. Just looking at this chart, the price action remains bullish. So this is a tight compression range, and it looks like it's a consolidation to these strong gains. So there's that's prices came back, tested the 50-day moving average back in early September, strong rally, and now this looks to be a consolidation of that rally. While the consolidation may take a bit longer to play out, I think the overall structure for this key segment of the market, I think it's positive. We've got those rising moving averages, the 50 and the 100-day moving averages, and price, of course, is above the moving averages. So that's that looks like it's a market or a group of stocks that has certainly has potential to trade higher in the months ahead. Coming back to the S&P 500, and that's the same overall structure that we have here. It looks very similar to what we saw on the Mag 7, and that is the rising moving averages and price above the moving averages. And you also see that long series of rising lows and rising highs. So again, all those classic trend markers are bullish. But I think it's always worth looking below the surface. So we've looked at what the big caps are doing, but of course that's only part of the market. It's always interesting to look below the surface as well, because I want to understand what's going on in the broader market, not just the Magnificent Seven. So let's just do that now. Let's jump to the equal weight, the S&P 500 equal weight. So of course ranks the largest stock and the 500 stock the same. And when we do that, well, it's mostly been trading sideways for 7 weeks. There was a short-lived break to the downside a few weeks back, and that was in late September. And then in early October, there was a break to the top side. But look what happened on Thursday. On Thursday, prices traded back down and are back down within the really getting back down within the range. And so this is looking like another false break to the downside, false break to the upside. So false breaks can often be a sign of trouble, but I don't think that's the case here. Rather, I think it's a sign that this is just a market that's not ready to move higher yet. And I think that's a sign of more consolidation being likely across the broader market. Also, it's interesting looking at an indicator of market strength. Occasionally we look at this. I think it's a really good one to keep an eye on. This is what I'm going to show you. This is the percentage of Russell 3000 stocks above their 100-day moving average. So the Russell 2000 is a US small caps. The Russell 3000 encompasses most listed stocks in the US market. So from the biggest stock down to stock number 3000. So it's a broad-based measure of the US market. Now, and this is showing the percentage above their 100-day moving average. So just take a look at this. So this indicator has been in decline since late August. So 7 weeks ago, in late August, the indicator was around 77%. So 77% of stocks above their 100-day moving average. As of Thursday's close, that has declined to about 55% of stocks being above their moving averages, or above their 100-day moving average. So we've got this internal momentum shift that you can see when you look at this, and that you don't see when you look at the S&P 500. You look at the S&P 500 on its own, and you've got this ongoing upward trend. But internally, that's not what's happening with a great number of stocks. A number of stocks have been coming back and declining below their 100-day moving averages. Now, this is not a signal of a market top. Often what you find with this indicator is that when it drops, it involves a consolidation in the S&P 500. For example, look at this period. So look at this period here, just around March, April 2024. So the indicator went from a little bit higher than it is currently now, came back down below its moving averages and continued lower. So let's see what the S&P 500 did during that time, and it's this period here. The market had a strong trending period, came back to its moving averages and rallied again, and that coincided with the indicator pulling back. And I think that type of situation could play out again now. So I think looking for a top in the S&P 500, it's looking for a top now is a bit like looking for a top when prices were trending strongly during 2024. It's like a smooth smooth gains eventually do give way to pullbacks, but when you've got the underlying moving averages trending higher, I think the odds favour that trend persisting for longer. I think that's a situation we're in now. There's certainly that scope for consolidation, certainly the scope for a pullback towards moving averages, or at least a pause while averages catch up, but the underlying trend does remain up. But at the same time, I don't want to be overconfident and chase stocks that are extended, and I think that potential for consolidation, it's certainly there after such a long run with only small and short-lived consolidations along the way. I think at this stage, even a pullback to the 50-day moving average would be a shock for a lot of people who are now maybe getting overconfident and engaging in extra risk taking. I just finish up this section on a positive note. I think, look, overall, I think the whole basis of what we've been talking about is generally positive. It's just consolidations. Remember, they do happen, but on a larger, on a bigger picture scale. So the S&P 500 has just posted 5 straight up months. So from where's that? From around May, we've got 5 straight up months. And it's interesting when you go back and look at the history on this, the data on this. I saw a study during the week on this exact thing. So since 1945, there have been, so since 1945, 94% of occasions where there have been 5 straight up months were followed by gains a year later. And the median return was something like 12%. So people will worry that we've had 5 up months in a row. It means something bad should be due. That's not what history has demonstrated. There's that 94% success rate of gains a year later. Doesn't mean prices move higher in a straight line. You can get pullbacks within a year and prices go up. But I think what that suggests to me is that it remains a bullish outlook, and but just don't let the smooth advance that we've had let you lose sight of the possibility of those pullbacks along the way. Okay, so we're going to jump over to the US small caps next. We've got the Aussie small caps. We've got the commodities to go through: copper, gold, oil, uranium, all your stock codes. But of course, that wraps up the free section. If you're not a strategy session member, there's a link below. Click that. Come on in. We're going to go through a whole lot of interesting stuff, which I think you're going to get some great value from. All right, so over to the Russell.